337.
337, that's correct. I have found on row 339 that having a clearing account that you can wash things through on a temporary basis has been useful. So that's why that's listed. And then all of the accounts down below from 341 down through 427, I am presenting that for your information, but you can see I say old company-wide accounts eliminated for 2020. So they would be on the files that the file that I created with the import data has data in these accounts, but I will tell you that the net of all of the accounts that go from row 342 down to 427, they all net to 0. So
Okay.
it really doesn't have any net P&L effect. But for example, if you look at row 344, that's where I put in 100% of my FICA costs in 2019, as opposed to in 2020, the FICA numbers are on row 193, and that's a P&L account.
Okay.
So my point is, if I wanted to do a comparison year to year, you know, since we're going to be the 2019 data, I collapsed for the departments everything down into payroll taxes, which is on row 197. And you can see I have a notation there for import of 2019 data.
Okay.
Okay. So my point is I've accommodated all of the stuff we want to do in 2020, and I've also made sure there's accounts to pull in the aggregated numbers that were included in 2019, so that there's still a way to get that information in.
Okay.
So that is.
This is the first I'm seeing this part of it.
Could you repeat what you said, Dawn?
This is the first I'm seeing this import file, just so everybody knows as well. So
Well,
does it seem doable?
Okay, you've switched to the import file. We'll go to that in just a minute. I would say the second thing I would go to would be the file that is called Monarch to KeyBiz General Ledger Account Cross-Reference Tape. Let's go to that file.
Mm-hmm.
Okay.
Okay. And if you look at that in column A as an apple, that's the current Monarch GL account number. And as you can see, the structure, as I communicated in the email, is I use a period delimiter to separate the company from the core account from the department. And so basically I brought in my GL trial balance at the end of October, and then in columns, the KeyBiz chart of accounts are actually in columns S and T, and then I have comments in column U. And then what I did to break it down into the new components is I've got in column N, O, and P, the new company number, which is different than it was in 2019, the KeyBiz core account, the department for KeyBiz, and then what I'm going to I call it combined, that's a concatenated account number, which basically takes columns N, O, and P and puts them together with the period delimiter.
Okay.
So that is the structure, and this includes everything that's on our chart of accounts. and I did a similar tab for dual, and I did a similar tab for FK.
All right, the only one question I had is we are sticking with single digit on the company. Instead of
Yes,
01, we're going with just one.
I'm assuming so. That I think the chances of us acquiring that many companies in the next 10 years is pretty unlikely.
Okay. I just
Now-
I have to do a lot of changes to my stuff to compensate for
Well,
that.
no, then let me say this. If you've already accounted or allowed for a 2-digit company number, then we just make it 2 digits. That's not a problem.
Okay, I mean, it's up to you. I can do it either way.
I mean, it's already
Yeah,
created that,
single digit,
it's already
so-
created that way, Greg. Just make it an 01, 02, 03. I mean,
That's fine.
that's fine.
I had misunderstood, Greg. I had the impression that you had it as one character rather than 2.
Yeah, let's just keep
So
it.
I was hoping we could keep up to 99 companies and still be good.
All right, well, that's fine. Then I'll just change all these to 01, 02 and make FK 99.
Okay.
Okay, and I'll just modify the cross-reference table, but the version that I now have, I've changed it back to that because I had misunderstood. I thought that you preferred it a single digit rather than 2 digits.
Well, if this is going to be a number field in KeyBiz, is it going to be a number field or a text field?
Well, I don't know if you can have a 01 as a numeric field.
No,
No.
I mean, the FileMaker will drop off the 0 if it's a number field, but we may need to make it a,
Text field.
I mean, the account number should probably be number fields, right, Peter?
Yeah, I mean, I think so. I mean, absolutely. I'm just still sort of like wrapping my head around it to figure out, why we're doing it this way. But I mean, if I understood correctly from the strategy we were going with, is we were going to use profit centers, right, for the different companies in KeyBiz, and then we would be having a department code as well as a separate field. But if we're going to lump them all together and have it be the GL account is representing the whole combination thereof, then you're going to end up having it to be a text field because you need the period to be part of that combined one. It ends up becoming your chart of accounts. Your account number is the combined one.
Okay,
So it's not going to be numeric, it's going to be text.
let me say this. This is the convention that I'm using now. If there's a better way to do it, we're early enough in the process that we could think of something else. But this is my current method, and I just adapted our current method.
Well,
Okay.
so
We
this is,
actually-
this is something you've been working on and had in your mind for quite some time. So we're
Yeah.
just now seeing it. I think probably one of the things that we're going to need to do is review it in more detail and really make sure that if there is a better strategy, we review that with you and offer that as some potential alternatives so that, we measure twice and cut once.
I understand, and I am supportive of that analysis and review. Now, the other thing that I thought would be useful for you, which is why I sent it to you, is I sent you our combining P&L and our combining balance sheet. And I wanted you to see how I conceptualize all these things coming together. So if you go to the year-to-date P&L, I'd like to start with that one because that I think is most salient.
Is that in a different email, Terry?
It
Yeah,
was
there's
the
a second email he
I
sent, Don.
Okay.
So your 1219 combining year-to-date income statement. Is that the one you're
That's
talking about?
correct. So what I'm trying to show you, and I'm really more trying to present the columns rather than the rows, is you can see that I've got KPC, which is company 1 in column B as in boy. Dual, which is company 2 in column D as in David. And then I have an elimination column in column F, and that's because Knepper does subcontract work to Dual, and also Dual does some subcontract work to Knepper. And so to actually know what your total printing operations are in column G, you need to do the eliminations of the intercompany revenues between columns B and D. So that's why, and if you take a look at cell F24, that's Frank 24, you see there's two numbers there, and that's basically, one is the intercompany sale from Knepper to Dual, and the second is the intercompany sale from Dual to Knepper. And you see,
The title of this document, 1219, combining year to date, is that the one?
yes,
Right.
And what tab are you on?
I'm on the summary tab.
Summary tab, okay. All right, go ahead, thanks.
Okay, do I need to back up and repeat
No,
that?
no, go ahead, that's fine.
Okay, so
Yeah.
now the other thing that you probably would not know because we haven't talked about it is that FK, which is in column I as in igloo, its sole purpose was to buy the property that Dual operates in, and it pays the mortgage payment on that, and it charges rent to Dual. So if you look at cell F as in I as in front, I as in igloo, row 65, that's what the intercompany rent is. So I've got the rent that Dual pays FK in that fixed overhead subtotal, and I've got the rental income from FK on that same line to eliminate that net cost there.
Dual place FK, dual place, okay, got it.
So, and then the consolidate, so my point is, I think it's important to have these columns, meaning KPC 1, Dual 2, elimination 3, and then printing operations 4, that's the sum of the first 3. Then an elimination column, we may not really need an elimination column between printing operations and FK as long as we route the rental income to the same row as where we have the rent expense on Dual. And then you end up with the consolidated numbers in column J.
Can I chime in for a minute?
You bet.
Right now, we're not using Dual accounting, so it's going to have to be an import.
Yes, that's correct. Just
Okay,
like
it's going to have to be an import to every month once the balance sheet and the income statement are done. It's going to have to be an import file
my
because
assumption is
we're using a different software.
we would do the same thing that I proposed for Knepper, which is for Dual and for FK, we would do imports starting in October of 2019, which is when they began operations in 2019. And then
This would be every month.
And then do a net change journal entry every month for November, December, and then all the months of 2020.
We'll just do an import.
Yes, that's correct.
Okay, of their statement, yeah.
Of their net change for the month.
Right.
What system are they using? What software are they using?
Peachtree.
Dual is using Peachtree, and Monarch, I'm sorry, and FK, we're using QuickBooks.
All right, well, we need to explore the import and export capabilities of those software to make sure that we,
Well, thing is, if I have to, I can just extract from there and put it into an Excel workbook. As if we have a cross-reference table that's active, then I would just send you using a file, an Excel file with the source company's GL codes. You'd run it through your cross-reference table, and then you'd be able to import it then into KeyBiz.
okay, if they send it to you and you can get it into Excel, or they send you an Excel document?
No, we have access to both of those other companies here. I can extract from either of those companies into Excel.
Oh, okay. Well, then that's fine. Then once it's in Excel, we have no problem importing it into FileMaker. So
That would be my intention.
yeah, okay.
So Jerry, we should probably ask for a 1220, a 2019 import or something to show them on what to build.
Well, what I would say is I sent, one of the other files that I sent was the GL cross-reference, the GL import for for KPC. So and that's one of the files that I sent earlier today. So if you take a look at that file.
What's it called?
It's the GL Net monthly summary active into import into KeyBiz. It's the third Excel file in the first email he sent.
Wow, a lot of numbers.
Well, these are the month by months numbers, right? So
Correct. So
we just have to convert this so that they stack up as opposed to being wide like this.
Right. So basically, if you you look at column F as in Frank, has the balance sheet numbers for December 31st of 18, and then column H through S are the net changes for each of those months. And if you take a look at, and you'll notice this isn't necessary for import purposes, but you see I have these balance columns, and the validation that I do here is I say if you look at column HAH, it says if you take the beginning balance sheet and you add all the net activity for 2019, you get a certain number, and I compare that to my balances at the end of December, and the numbers all match.
No, I understand what you did here. I mean, it's just so the activity is, so your beginning balance is your F, and your changes are H through T, H through S.
H through S, right.
Right. And then they should roll up from there. And then all you did was to just verify your balances in the other columns.
That's correct.
So my recommendation would be that we have a chance to review these documents after the call today and kind of come up with, what our recommendation is, knowing everything that we know from your side, Jerry and Don and Greg, and then the KeyBiz side, and then come back with a game plan, any recommendations that we would have differently than what we're talking about today.
Yes,
Okay.
that'd be fine. Yeah,
Now-
again, I made an assumption about the way to do it, but I am very open to suggestions that there could be a better mousetrap
great.
out there than I thought of.
That's exactly what we want. We just want to get it right. We want to, do it one way that's going to work both now and to the foreseeable future for Knepper.
Okay, and
Yeah.
my assumption at this moment is I would do the same approach for dual and FK for October, November, December of 2019. And then in 2020, we would do that on a monthly basis going forward.
Okay. Don, go ahead.
Just so you're aware, this income statement that's on here is not what we want to see moving forward, though.
Yeah, remember I said the important thing are the columns, not the rows.
Right.
So the income statement is not going to look like this after the imports are done.
Right. So we should probably also, focus on that. Don's right to say, okay, what do you really want it to look like when on a going forward basis?
Well,
Right.
I think we have some ideas around that we've been discussing all along. So I think we take that lens, look at this data through that lens, so that we can make sure that we produce the right document. Again, this is a data overload here. We just need to review it and analyze it, and then come back with a game plan. So if everybody's cool with that, give us some time to review that. Can we go ahead and get started with Peter's agenda for this meeting?
Okay, let me just make one last statement before we leave this subject.
Okay.
We, in a previous conversation, had talked about the fact that we would be using the department codes to separate expenses into cost of goods and selling expenses and admin expenses.
Yep.
And we still intend to do that and want to do that. But my assumption is, and my belief in terms of trying to get something that has the best utility, is that we have three different choices on the P&L. One would be, I'd like to see what you actually have as your default, because there might be something in your default that is an improvement over what we have, and I'd like to at least consider that.
Yeah.
The second is the P&L that you have seen that we just sent you. One of the aspects of it that is valid and important is, if you go back to that P&L report, there's a total revenues line, and then there are what I refer to as direct production costs.
Mhm.
And then after that, you get a calculation of something called value added.
Mhm.
And that is important because that's one of our key metrics. And if you go back to the chart of accounts, core accounts page, if you took the revenues number, subtotaled that, and subtracted out the direct production costs, which go from row 138 to 152, I guess you want to include freight too, so that would go all the way down to 164. You subtract those costs from the revenue, you get value added. So my thought is, when you look at the chart of accounts, I think what one of the reports that I have suggested that we have is one that is consistent with the groupings that I've got on the chart of accounts file. In other words, if you're looking at the chart of accounts file, there's a revenue section, there's a direct production cost section, there's a freight section, a postage section, a payroll section, a payroll tax section. That having the data presented with subtotals for each of those groupings, I think is a useful and meaningful report. It may be different than the standard P&L that we use, but what it does is it groups like kind of things together, regardless of whether they're in cost of goods or whether they're in selling or admin.
That's okay. We
No,
understand.
that's fine. I mean, I think there just has to be at some point a consensus on what do we want this thing to look like when it's done, and then it's easiest for us to then wire to that. Obviously, we can handle all of this complexity that you've thrown at us. That's not a problem. It's a matter of, okay, where are we going to end up? That's what the part we have to figure out.
I mean, the important thing is to have clear business, from a business point of view. What does your financials need for your executives to make a good understanding of where your company's at and how
Right.
you can serve them and what they're interested in seeing in terms of key metrics for their company?
And in reference to that, I will tell you, as you had suggested, we met with the senior managers of the company on Monday, as well as our outside accountants or auditors. And the broad consensus of that meeting were that we need to have at least two versions of the P&L. One, which is similar to what I just described off of the chart of accounts, and the other would be a more standard P&L, which has revenues less cost of goods, subtotal at value added, then remaining cost of goods, gross margin, less selling, less admin, operating income, then other income and expense, net income.
So
And
Robert,
we can give you
that's
samples
standard,
of what we're looking
standard income
And
statement.
those are just two different versions.
Well, what did Don say? I wanted to hear what Don said. What did Don say?
We have some samples we can give you,
Good.
to give you an idea of what we might want that to look like.
That'll be very helpful.
But again,
Yeah,
I
because
think
at the end of the day, obviously, and not taking anything away from what Jerry's done, because I know he's a very thorough, thoughtful guy. We have to work backwards from what ultimately they want. And then the chart of accounts may need to be varied somewhat if there's a new groupings scenario that we're going after. And
I think I've already accommodated that, but that's
Okay.
why we were numbered into the method that they are, because each of these subgroups has numerically sequential numbers, or they're in a certain series.
Well,
That was intentional to try to make it easier to come up with subtotals.
Go ahead, Alan.
Well, I'd really like to get a sign off on the executive side that this is what they want, they agree, so that we all are on the same page. Is that possible? Have they seen
What I'm
these?
saying is, I had that
No, they
meeting
have
on
not.
Monday. I had the meeting on Monday, and they gave me authorization to proceed with this.
They did not see this though.
They exactly saw this. I showed it was
So your
on.
import file?
Absolutely. It's not the import file. I'm referring to the chart of accounts file.
Right. They only saw that. Right.
That's
They
correct.
didn't
And
see any of the stuff.
all that other stuff are just permutations of this file. That's all.
Well, I think two things. If we take the chart of accounts and we start there in
Yes.
terms of a consideration and look at the income statement samples that you're going to send over, Don, then we can begin to reverse engineer to say, okay, we can get there from here, or we can't get there from here in order to deliver on what the executive team needs. I think that's probably going to be the next step.
I have no doubt that you can do it with the information you have.
Okay.
I am specifically interested in what your default financial statements look like, because that may be a perfectly acceptable additional alternative.
Sure. Absolutely.
Well, that's fine. And I think that, obviously you've broken down the chart of accounts into your groupings. And, obviously, since if you had to add or subtract from those, what's included in those groupings, when we do our financials, maybe we're just adding a grouping code to them anyway, just so we know where they're going to roll up against.
That's right. And I also intentionally left room inside the numbering system so we can insert additional rows if necessary to be included in those groupings and still stay within that range of accounts.
Okay.
Okay.
Well, it's just, I've been down this road many times, Jerry. I don't, it's no offense, don't take it personally. I'm just trying to make sure that we please and serve the ultimate goals of the company. So I just wanted assurance that everybody is aligned and what we're going to work on is what everyone wants us to be doing.
Okay, I would tell you that in the meeting I had on Monday, I was told specifically that if we developed reports that are consistent with this chart of accounts, that was able to give them information for this year and last year grouped in this way, they would find that to be a useful and meaningful report.
Okay. Well, I think that's a good launching off point. And we will proceed based on that. I mean, we're going to evaluate and analyze before we start doing any kind of coding or work in the system. So once we've done that analysis and evaluation, having the end goal in mind, that the samples that Don's sending over and this chart of accounts and supporting data, then we'll be able to come back and say, okay, we can get there from here and make sure that everybody has approved that, and then we'll move forward.
Okay.
Marcus, I'm looking at this now. On his chart of accounts files for discussion today,
Yeah.
the one that says keep his chart of accounts is dated 2/13.
Yeah.
There is an income statement, because I didn't get to look at this either. It says company code and then core account.
Yep.
Yes.
The core account, and I wasn't maybe on the call when you first started this, but the core accounts are really what the income statement really wants to look at. It's like a lot of that is there and should be on the income statement. I mean, I could show you some other ideas, but I think what gets overwhelming, and this is just maybe my opinion, the company codes on the back of the GL describing the departments gravitates to so many more GLs. And I think it just gets overwhelming when you look at it that way.
Mm-hmm.
And so you're saying you have a way, instead of using the department IDs, including in your GLs, that you can have it within the software itself. Like name it pre-press, or is it a text field, or is it a company code, department code? I don't know. I think it could be helpful from somebody not knowing what the department IDs are, being able to code it properly, having a department description than just having a department number. That's just my opinion.
Okay, when you say department, that's different than company. Is that correct?
Yes, it is.
Yeah.
If you look at the department codes on the GL, on the Kiva's chart of accounts tab, these are literally areas of production in most cases, or indirect production, or administrative departments. So if you looked at that sheet, you'll see there's a pre-press area.
Yeah, I'm looking at it.
It's department code.
So are you wanting income statements by department code?
The answer is it would be one, I would say that the overall structure when you're designing the P&Ls would be on a company-wide basis, but we would need to be able to have a drill down report by department if we needed it. Because at some point in time, as I think I discussed in a previous conversation with you, the indirect production departments, I need to be able to know what those values are at the end of each month, because then I have to do an allocation journal entry back from the indirect production departments to the direct production department.
Jerry, and I
Yeah.
thought we were going to discuss that we weren't going to break down all the vehicles in those three departments, the tractor trailer, the box truck, and the vans. We were just going to just name it the fleet.
Well, the answer is we discussed that in general. I'm not sure we came to a final decision, but this is the now. We can collapse them down into just vehicles or not. I've explained why I thought it was a good idea to break them out. I don't think it's critical. If we needed to collapse those down, we could.
Yeah, I think we should just call it the fleet.
Well, just so we're clear, if you're on the department codes, 690 are basically personnel and benefit costs associated with the drivers for the fleet. And rows 43, 44, and 45, those are related to the vehicle, the type of vehicle that they are. If we wanted to combine anything, I would combine those three, but I would still keep the payroll costs separate.
All right, I have some questions. Cutting,
Sure.
folding, stitching, binding, die cutting, handwork, all of those seem like tasks within a job.
Well, they are, if you think about a production line, each one of these departments is a section on the production line. And
Okay, I understand that we have another printing company. I've been to their facility, so I get what those are, but I'm just wondering how you can do an income statement just on a particular task.
well, the answer is we may not have the revenue there, but we would have the costs.
Yeah, you have to have your cost in the cost of goods. You have to be able to allocate those expenses out so that you can determine what their part of the pie is.
Well, I understand the cost part, but I just don't understand the revenue part.
Well, the answer is
There is no revenue.
there was a proposed method, and I think I mentioned this once before. There was a proposed method to be able to allocate the revenue on a job based on the costs on that job. And basically, if you had, for example, a $10,000 job and the costs were spread across these various departments, that you could allocate that 10,000 to all the various departments. And that was the intent when we went to Monarch in the first place. Because we were never able to effectively, accurately capture the costs by department, we abandoned them. It's still a good idea.
So you're talking about mapping the percentage of cost back to the percentage of revenue potentially.
That's correct. But that is, a level of complexity that I don't know that we're ready to tackle at this time. And so at the moment, the reason that we need the cost broken out is really so the department's broken out is so that we can accumulate the cost by department for purposes of coming up with what our hourly cost rate is by department for the direct production departments. And that means that when we get the costs into those departments, that we also would be getting information out of Paycor, which are hours for each department. And then you can then, if you're accumulating that in what I would call as a non-financial field, but as a data field, then you can use that for purposes of doing some calculations for what the rate per hour, the cost per hour is by department.
You know, that's
No,
what I
Jerry-
mean about having clear metrics of what the purpose of this data is. And what
Well,
you,
we cannot use this data to come up with budgetary hourly rates when the system's not going to do it for you. We don't need to make the complexity of it.
No, you misunderstand me. What I'm saying is we need to have a way of tracking our costs by department, and we need to accumulate our hours by department so that we can calculate, not necessarily in the accounting software, but in some way, shape, or form, what our actual cost per hour is by department. And then we can apply accruing rates and all the rest of that stuff. But unless you're accumulating your costs by department, you're not going to be able to come up with a meaningful cost per hour by department.
well, Jerry, that's perfectly understandable. I get what you want to do with the data. We would usually call that job costing and do a
And that would be on my side.
well, okay, well, fine. But I'm just trying to get
So it's
clear.
budget side,
Are
and
these
we
job
have
costing?
the hourly rates in there.
Right.
The rates that Greg has are estimated rates that go back several years. And as you saw in the meeting, Don, that we had on Monday, I compared the rates, the actual cost per hour that we experienced in 2019 to Greg's AIC rates. And for some departments, they were close. For some departments, they were substantially different.
Right, but we've had it for 4 years and we haven't done a darn thing about it.
But that doesn't
If
mean,
if we're going to do it, then we need to adjust the rates properly. And can't we get the stuff out of Paycor to give us the payroll that you're looking for?
Paycor will give us the payroll dollars, and they can give us the hours, but they can't give us all the various other costs that are not in Paycor. That's why we set up the GL in this way, to capture the cost by department. All the other costs.
But nobody's punching in bindery. I mean, we're not doing anything with the WIP on that, on each of these departments, are we, Greg?
We're capturing it, but we're not doing anything with it.
So what is WIP doing for us? What are we doing with it?
Just on my cost sheet.
Right.
Here's the
We're not
thing
doing
is,
anything with it.
we need to have a way of periodically updating the rates that Greg is using for his AIC, which haven't been updated for several years. And the way that we get information to do that feedback loop and validation for updating purposes is by doing what this whole thing is structured to do.
Well, I would like to just have you help us understand the purpose and how you want to use this data. If you could add as another column next to these departments of what ultimately you're needing, that would help us meet the need if we were more clear what it is that you really want to get out of this data.
I think he's looking for a filtering situation, Alan. I think that if we had, the department code, if, as opposed to it be baked in the GL number, be tagged whenever it's identifiable, then you'd be able to search for transactions or postings that had that department code on it, and then be able to come up with some understanding of the cost over a period of time for any given department. And then, because obviously
I get that. I'm saying these aren't really, the goal of these things is not to be in an income statement. The goal is to find out some other factors in terms of managing their business and how to price.
Right, but if you had, to Jerry's point, that code, if you would associated with revenue and expense somehow, your filtering effort to stack up the activity by these department codes would create a sort of income expense analysis that gives you some sort of sense of what a mini P&L of that department might look like based on rabbit filtering both the revenue and expense side of those little department codes. It would give you that ability to say, okay,
How
if for that
profitable
period
is
of
this
time
department?
and filter it that way, here's what those things would stack up against, and here's your net for that activity. It's
Well,
all a question of whether or not it's worth the effort to be able to do that, because the hard part of that is what is obviously the expense side's easy because you can tag the labor and you can tag the bills when they come in. The hard part is what's the revenue allocation of these different departments.
Exactly.
That's always going to be subjective.
Right.
Well, and I guess what I'm saying is, while I've communicated a theoretical method that could be implemented, I believe that that would be a good thing if we could figure out how to do it. I would say that that is a level of complexity that I did not consider to be essential at this point in time. And what is important, though, is that we're able to capture the costs on a departmental basis so that we can, on a periodic basis, and my suggestion would be on an annual basis, review the AIC rates. AIC is an abbreviation for all-inclusive cost by department, and that we can have a way of, we know what Greg is using today, but as I said, it's a dated number, and that's not a criticism, it's just an observation of where we are. We need to have a feedback loop to be able to update that periodically to validate that we're using accurate AIC numbers for purposes of WIP valuation, as an example, or for purposes.
Yeah, but here's the thing: is at some point to do that, and I understand the complexity of this, is that you're going to have to say, okay, for every job, you're going to have activity by department code. And
Yes.
you're going to have to take whatever that total cost is of that job,
Yes.
and then use a proration of the sales against that cost basis if you want to have any kind of rational, repeatable way to do it. Now, the question is that really a fair way to do it? But that's the way you would have to do it. I'm not sure. When you do that analysis, I don't know any other way you could automate that process.
And I don't know the answer to that either. I guess that's why I said I'm willing to forego the revenue allocation by department, other than just doing the revenue breakdown that we've already had talked about, which is you're going to have web and sheet fed and digital and maybe mailing. And that was how we were going to have the revenues allocated. The last I remember our conversations.
Yeah,
Greg,
that's what I remember that you talked about at the beginning, is those would be like the 4 or 5 profit centers that we would be tracking.
Right.
That's correct. So my point is that breaking out things by this department, the entire purpose of that is to come up with a method of periodically updating the AIC rates that Greg uses when he is determining what the labor costs for all the jobs are.
No. Clearly, you want to have some, check that your billing rates that you're charging people are in line with what it costs to do that work. And
Well,
otherwise you're what's the point?
The billing
So
rate.
Peter, do you have another suggestion on how to get that information without using all this departmental information?
Well,
Yeah.
I mean, there's obviously you have,
I guess we're going to have to come up with an idea in order.
Well, in your business, I mean, ultimately your billing rates are going to be set by competitive forces more so than by what your cost forces are.
That's exactly correct.
They said that in the meeting.
And I think that given that, the only time this becomes relevant is when, to use an economics, analogy, is when the line of cost intersects the line of selling price, and to the point where your costs are now higher than your selling price, you got to get out of that business unless it's out of that service, because you can't do it at a rate that the market will bear, right? And ultimately, that's the only time where this is going to become relevant, is when you have to make that decision that I can't provide this whatever service it is profitably anymore. I need to know when that is, right?
Well, the network and kitting, we know you don't make a dime in it. We know we don't. It's just part of the overall cost.
Right. Well, then it's really not a service that you can get rid of. It's really a component of another service. So then that analysis is moot on that.
No, you're going to lose money every time.
Yeah, but the problem, the issue then is when you have all that data in front of you and you can do an evaluation of by department, looking at the overall company revenue and expenses and breaking it down by department, and stitching is not profitable, but as a department, but what you're producing for the clients that require that, there's enough profit margin there to justify having that as a service. So being able to have all this data and look at it and break it down departmentally is important for the executive team to be able to make those, because you guys are going to give them the individual knowledge about why that's important, but they still need to see the overall picture. And I think that's ultimately why this information is important.
That's correct.
Okay.
Right. So it's a question. And so if you take stitching, for example, do people show up and say, "Hey, I just want to buy stitching today"? Probably not.
No,
right. It's something that's usually part of another job. And so if it's only available as part of another job, well, then you really can't make that a market assessment of that service per se. You just have to know what the value added bump is if someone asks for that. And that's probably cost driven.
Right. We're providing the detail for the folks who make the decisions to be able to understand that level of detail when they make the overall decisions, because you may have a client who is a $5 million a year client who is your only client who asks for stitching, and that revenue and profit justifies keeping that department going.
Okay. My concern is that if you're going to not trust Greg's job costing and you want the actuals in the GL as a part of a report, are you going to be posting this information by department to the GL? Is that your expectation?
That is what we've been doing in the past as it relates to the costs, not to the revenues, but for the costs.
Okay, but cost in our system goes through AP. So
yes.
Are you going to have a separate AP that's going to be broken out by these departments?
Every AP item that we buy is going to have a GL code, which is going to include a department code as part of it.
Okay, I get on a material level you're buying things, but I thought we were talking about labor costs here.
Labor costs.
Scenario that we did already addresses that.
Okay, if you look at this department codes report, departments 100 through 650, all of those departments, those individuals working there are supposed to be coding their time to jobs. That's why they're called direct production departments, as opposed to the indirect production departments, which don't code their time to jobs at all. So theoretically, Greg has an AIC rate for each of those departments from 100 through 650. And in fact, in some of those departments, there are multiple machines and he's got different rates for the different machines involved.
Okay.
And so theoretically, if employee number 62 worked on the 705 press, which is a sheet fed press, there's an AIC rate associated with that 705 press And if he works 10 hours, then it's 10 hours times that AIC rate.
Okay, but if a person is doing binding, are we gonna import payroll data to get,
No,
how are we
no.
gonna get how much time was spent on binding and how it related to that
Okay.
job?
There's two different aspects of this, okay? For general ledger, I'm going to make the distinction between job costing versus general ledger.
Right.
For general ledger purposes, when we get our data from Paycor, it is broken down by department. We have the dollars and we have the hours that comes from Paycor.
Mm-hmm.
And then that's where it goes to the general ledger. And that includes, by the way, payroll taxes and workers' comp too.
So you're going to use the general journal for that entry of that data? How are you
It is imported with a GL, with a journal entry by department. Yes, sir. The payroll, payroll taxes, and
That's
the
the
work.
Paycor. That's the Paycor part.
I see. Okay.
That comes straight from Paycor. So that's for the general ledger side of things.
Okay.
As it relates to the job costing kind of things, we have established what I refer to as AIC rates, which is the subcomponents of that are direct cost per hour, variable overhead per hour, and fixed overhead per hour by department. The combination of those three is the AIC rate. And we estimated those numbers some years ago, which is what the rates that Greg is using right now. And so when we run a job and the people individually are coding their time to jobs, that time goes to those jobs. It is multiplied by the related AIC rate based on the machine they were working on, and then gets added to the job. And the reports that Greg runs out of his system, what we call a job cost sheet, has the number of hours charged to each of those jobs from those machines, times those AIC rates, and that's a dollar value assigned to the job costing of that job.
Okay.
So that's an internal reporting, Alan. It's just
That's
job
internal
costing.
reporting, that's correct.
Nothing to do with GL.
Not general
It's
ledger.
all job costing.
It's not general, that's job costing, but it's not general ledger accounting. And the purpose of all of this here,
To Jerry's point is he wants to be able to validate those rates and to
Right.
make sure that they're not deceiving themselves by not periodically evaluating those rates that are in Greg's systems.
and I
I
think,
totally get that.
as I said, Greg, we're using rates that are several years old. This is not a criticism, it's just a statement of fact.
No. I mean, it's you're exposing yourself to risk if you're not periodically evaluating those rates.
That's
No
right.
question.
This method is the way to do a periodic, and I'm recommending annual evaluation of those rates.
And so what do you need? What kind of report do you need?
But to Jerry's point, he's saying that the information that we're gathering as we do our accounting has to be granular enough to be able to extract the data necessary to do that evaluation of those rates on a periodic basis. And I totally get that. And the only way to be able to do that is to have the coding of the cost be detailed enough to be able to put those costs into the buckets of those departments, so you can on a macro basis say that the output of this department was this many hours at this much cost, and therefore here's how much what the activity cost was of that department, and then you got to compare that against what you're actually charging it out for, and your difference is going to be your idle time percentage, which is, I think, a component of Jerry's analysis now is what's the productivity rate, because you're going to know what the total bucket of cost was, and then you have to have some factor as to how efficient were these people, and then you could say, this is what I should charge that out at. And I think that's what he's trying to do ultimately.
But how are you ever going to do that if we don't actually get our hourly job into the accounting system? I mean, if somebody works 3 hours a day out of 8 hours a day, that's never making it into the accounting system. How do you figure out productivity without data there to use?
Well, your productivity rate, as far as what your idle time rate is going to be, some wild, it's going to be some assumption number that if you want to really be doing a careful analysis on, you're going to produce a range of values based on a range of productivity rates, and then you're going to say, gee, what's real here, so that you have some sense of what the actual situation is.
Yeah, you're going to have your capacity.
You're
going to have your capacity number versus, work
Right.
going through there, based on the differential then being, I have this much capacity,
Right.
I have this much work, therefore it was this efficient.
Right. You're going to get a relevant
But
range.
is that in the accounting system?
Well, it has to. At some point, you have to be able to generate the gross cost number for that department and its total hours that you actually purchased from the labor market, to say, okay, this department costs the company this much money this year, and then you're going to look at how much of that did I actually bill out to the world, and then that's going to give you your general productivity rate on a macro basis for annual basis, and that's
We're never going to
that.
do it.
Yeah.
Well, that's what Sherry's doing now with his reports, and so the question is can we make it easier to do that analysis by being granular enough in how we do our accounting, so we can easily pull that cost number to then do that analysis.
And I
He
guess
just shared
that's why.
for the
And
officers
that's why the rates are still 4 years old.
First time in 4 years.
Say that again, Don.
He just shared all the information that he's accumulated for 4 years to the officers the first time last week. So that's not something, I mean, it's information, but it's not going to make a decision for anybody to price a job differently. So, I mean, I don't know.
The answer is, I think, that we need to be able to accumulate this information so that we can have it as a useful tool on a going forward basis. You're certainly correct that this has not been high on our communication level list of things, but that's because we had more urgent things that we were working on. And
well, it's also because you didn't wire it into your system, so it was a manual operation. Now, I understand that the objective is like, okay, if we properly collect things and we connect the labor hours to the costing on a department level basis, ultimately you can automate that gross cost, and then you just have to guess at what that productivity rate is to then come up with your range. But the 90% of the work is the accumulation of the cost.
Okay, let me just take 2-3 minutes to sort of summarize where this all comes together. On a job, you bill whatever you bill, that's your revenue on the job. Your material costs are what it costs, the paper, the ink, if you use subcontractors, et cetera. If you subtract all of those direct production costs from the revenue number, you get something we refer to as value added. Then if you subtract from that the AIC labor, you get something called contribution. That contribution tells you whether you're making money on a job or you're losing money on the job.
Sure.
The costs, I'm sure we've got good numbers for that. But the AIC numbers are stale, and we need to have a way of validating the accuracy of the AIC numbers periodically so that we can have meaningful numbers for contribution analysis and determining whether it's worth doing jobs for certain customers based on the pricing we have. Because if even if we have value added, if the labor associated with doing a job is giving us negative contribution, that means we're losing money on jobs. And that is only meaningful if the AIC rates are meaningful. So we need to have a way.
I understand. I think we all understand, Jerry. It's a question of, we just have to. We need to wrap our head around this. I'm running over already on time, but we have to consider this certainly through the chart of accounts configuration and how things are coded. Otherwise, the information's lost. There's no question.
So
Right.
I think we're at a point today where we need to take all the information that's been offered and digest it and discuss it. And I think that's the extent of what we're going to be able to discuss today. Was there anything else that anybody needed to bring up before we close out the main portion of this meeting?
No, I don't think so.
Okay. Alan, anything else on your end?
Well, we need to talk to Greg about a few things.
Right. Greg's going to stay after we close out the main meeting to review some of the things he needs.
And I would like to follow up a little bit with Don on some issues, but for the main meeting, yes, we're done.
Okay. Jerry, anything
Okay.
else that you'd like to
Thanks,
present before we close out?
I've said everything I need to say.
Okay.
Thank you, Jerry,
I want to say thank you, Jerry, for the time that you obviously took a lot of time and consideration to put all the documents and data together for us. And we will go through it this week and do some evaluations. And we should have a report back next week on recommendations moving forward.
Okay.
Thank you, Jerry. This is very helpful.
Thank you, everybody.
Thank you.
Greg, can you stay after a bit after we close this out?
Yeah, I'm here.
Okay, buddy. All right. Thanks.
Hello, did you want me or no?
I just wanted to have a brief follow-up with you. I don't know, maybe if you want to do it offline.
Yeah, let's do that.
I just wanted to get
let's
your
do that off of this call, Alan.
Okay, all right, sounds good. We'll talk to you later, Alan.
All right.
Thanks.
Hi, Dawn.
Thank you, Don.
Bye, Greg. Maybe you should be in on it too, Greg. Maybe we should call you as well.